now to take action of the primary markets, and we have iFinance, which will be coming out with its IPO. And to talk more and understand about the company, we're now being joined by Sanjay Sharma. He's the managing director, and he's right here in our studio. Mr. Sharma, thanks so much for joining in today. Firstly, many congratulations on the IPO. It's a big one for you as a company started way back almost 4 decades ago. But let me start off with some of the key aspects that have been dominating the discussion about your company. While it's a newer segment, newer sector that you appeal to, there are some concerns on asset quality. There are some concerns of the health of the book. If you can start us off with that, what has been the journey in terms of it to being where it is right now? And what is the expectation basically that you will be taking off in the medium term for the company?
Yeah. Thank you for having me on NDTV Profit. And it's a core question, and you have led with the core question. See, iFinance provides working capital finance to the micro-scale businesses which are in the unorganized sector. These are people who need 1 lakh to 2 lakh rupees of working capital and have been denied that by banks or NBFCs because it's very difficult to underwrite them without documents. iFinance has used a cluster-based underwriting to address this segment. And contrary to the belief that this sort of segment being unorganized will be more risky and amenable to high credit costs, we have over 12 years demonstrated that we've gone through demonetization, we've gone through COVID, we've gone through overlending recently, and the volatility in credit costs has not been as substantial as in many of the similar players. And I think the way to look at it is that while we have a typical credit cost of 3.5% to 4%, being a 2-year tenured product, the same terminal loss in a 5-year tenured or 6-year tenured mortgage book will look like 1.2%. So when you compare us in that range from 3.5 to 4%, then you can check that how much has that volatility been. Leaving aside the history of demonetization, COVID, where also we rarely crossed more than 5% of credit costs. Last year was the first time that we touched 5.2% of credit costs, and today, 4 quarters, quarter on quarter, we have seen the credit costs drop. And today, we are again back into that 4% sort of range. 4.6% is the last credit cost of the last quarter. So it's very quickly settling down. Being a 2-year loan also helps because there's no residual historic problem. Most of our lending after June of 24, before which was the overlending problem, constitutes 90% of our book. So in a way, you can say like they say in Hindi, ki haathi to nikal gaya, poonch bachi hai.
That's pretty interesting. Sanjay ji, I need to ask, what is your average consumer looks like? Kahan pe hai? It has been, you have spoken about cluster-based, kind of a business coming in. So, kya business ideas are rahe hain? Kya trends? And of course, which states you are present?
Yeah. See, we have tried to diversify our portfolio as much as we can. And the fact that we are in 21 states and union territories, and the fact that north, south, east, west, wherever we look, we have almost roughly the same number of branches, percentage-wise, has been done consciously because we don't want to be affected by one state, 2 state problems. And there have been many historic challenges. Andhra in 2010, more recently it was Karnataka and Tamil Nadu. So first thing is that any state level disruption does not affect our portfolio much. Our biggest state in India has 15% of the business, which is Uttar Pradesh, and I often say Uttar Pradesh is like 3 states, so not that much of concentration. The customer that we are talking of is a typical manufacturing unit. It could be a cricket ball manufacturer in Meerut. It could be a shoe manufacturer in Ambur in South. Or it could be a trader, could be a grocery store or a cloth merchant, etc. Or it could be in service sector, which could be, let's say, a small restaurant or a tailoring shop, etc. Or dairy. So these are businesses which generate employment. And Sharad, interesting thing is 90% of the non-agricultural employment comes from this micro-scale industry. There are 7 crore of them. And they generate almost 11 crore of employment out of the 12 crore that comes from non-agri. So important sector, and our focus in this sector has helped us give loans to more than 10 lakh micro-scale enterprises. Our active base today is about 5.8 lakh. So very granular book, very diversified book, and that is what I think adds to the stability of the portfolio and the stable credit costs.
You've also seen, sir, that of course you're present across MSMEs. Now you've added multiple products like the mortgage loans, Sarl property loans continue as a key product for you. When you look at all of these customer bases, because you're so diversified now, the key question always comes: why the IPO now? Because we've seen the last 3 to 4 quarters, a lot of the listed entities have also gone through their challenges, but you seem to have come out of those, as you mentioned, and the outlook seems positive as well. So the key investor question largely that why the IPO now? Because of course you would have waited a few more months, the valuation could have perked up a bit, but any perspective on that?
Yeah, I think it's a question that we have ourselves asked often in meetings. And at least I believe that when you are coming out of the bottom of a credit cycle, probably is the best time to be in the market, because we are starting a relationship with the public investor. And what better than to start at the bottom and then build the trust as you go up. So one is that I believe that it is difficult to get into the IPO at this time, but if you can, then it's a great time. Yes, it comes at a cost of a lower valuation, and I believe our valuation is very attractively priced. It's the lowest that we have seen in the private equity rounds.
Yeah.
But I think our existing investors are solidly behind that price. One of the oldest investors is Elevation Capital, which doesn't want to sell anything in the OFS even. The new investors, whether it's Temasek Trust or British International Investment, they are holding on. And one of our unique investors, Google Capital, and we were the first NBFC where Google decided to invest in India, they are also happy to hold on. So I think since investors don't mind it, I don't think that there should be a problem. I am not selling any stake at all during the OFS. So I think we'll look for the value as it emerges.
Sanjay ji, you spoke about the values, but there is a little bit of concerns. We discussed that as well. The H1 numbers, they were down. A lot of folks who are reading the RHP, they would be getting these numbers and making these calculations. Did the company take this hit on the industry specific purpose, and will this actually cannot say the forward-looking statements, but will the road be better now?
Yeah, I think, see, the last year's FY25's first 2 quarters were normal quarters, and then third and fourth quarters where the incremental credit costs came in. So when you compare the first 2 quarters of FY25 against FY26, FY26 will look bad because FY26 still had residual credit costs in the first 2 quarters. That's the main reason why when we compare, it doesn't actually show the right picture. Now, without going into the forward-looking statement for the next half year, the important part is that there's only 9% of our portfolio which comes from the old regime when overlending was happening, which is before June of 24. After June 24, 90% of the portfolio has come after that, and it's showing all signs of a good portfolio. So fingers crossed, better times are coming, and hopefully that is why we are in the market at the bottom of the cycle.
The other interesting part is the model, right? Because of course you can't talk about forward-looking statement, but what you're able to establish now, and it's that sourcing and collection. Those are the 2 most important parts of a business. Now you've decided to have it in-house. How? Firstly, the reason for that decision. The other aspect is because that also increases your costs. So your cost to income, when comparing to listed peers, is slightly more elevated because you've decided to have both these functions in-house. So how does that? The rationale for that, and how do you look at the cost to income number as well?
Puneet, we have always gone for quality of origination rather than just a volume that has to be increased. So therefore, our origination is completely in-house. We don't use a DSA, we don't use a connector, etc. It comes at a cost, without any doubts, but it's a good cost to have, because that makes sure that the credit volatility is not there. We are very fortunate that we are targeting a base of 7 crore such micro enterprises across India, and it's a very large target addressable market. So growth is never a challenge. In the last 3 years, CAGR, we have grown 43%. Last year, we grew at 25%. And our growth is, even in this year, when many have slowed down, in the first half, September, if I look at September to September comparison, we are still growing at 21%. So growth is always there. Credit costs has to be less volatile, and which we have worked on. And collection that you mentioned, again, collection is all done in-house, which means that there's good control over the people. There's no harassment of the customer. The number of complaints that
Which
come
has
to
been
us.
a key concern for this industry over the last few years. So you have decided that you want to keep it in-house and have that control and not have any of these issues that you mentioned.
Absolutely, 100% behind that.
And Sanjay ji, I just have one question from my side. Just 3 lines, if you had to pitch your company, what would that be? 3 lines only.
See, in 3 lines, it's a company that is addressing a large target market. It is actually adding value to the customers and transforming their lives. And third is, it is a business where we can see long-term growth with good credit parameters. These are 3 things unique about the business. And Shad, although I'm going beyond the third sentence,
Go
but
ahead.
it is a business where underwriting is important. The way we use cluster-based underwriting is truly unique, and we only got better and better at it in the last 12 months. I think it's the 3 things that I mentioned which has attracted a very strong interest from the foreign institutional investors. You would notice that in our anchor book, we have some of the best names from the FI world. And that is interesting because they have seen the potential long-term. And these are long-only investors, so we're very happy to be in a position where, in a difficult market, we are making some headway.
You know, as we wrap up the conversation because of paucity of time and you know, we did show the investors, the other aspect is your customer, right? Now, you want them to come back to you in your tenure, which you mentioned, every 2 years. Yes. So currently, your customer profile, do they have more loans from other players, or is it largely that they are banking with you? You have added a couple of more products in the last few years, so that's the advantage that you can build on that same customer, reduce the cost of origination, build on with the future loans as well.
Yeah, but that is one of the areas of work focus for the business.
Yeah.
We have customers who, when they perform well, their payment behavior is good, we give them a repeat loan.
Yeah.
And that's an encouragement for the customer to actually pay well and get a repeat loan. Our foreclosure rates are hardly 2.6% if I take the last year's data for the year. It's a very low foreclosure rate.
What could it be for the industry? Is there any estimate that you can help us?
The industry typically sees
it would be higher, I'm guessing.
Anywhere between 1% to 2% per month.
Per month, okay.
Right, so that's the sort of foreclosure. We don't have that because customer actually likes the service and does not have too much of an option to exit. You talked of how much of customers have other loans. Most of our customers have 0 business loans or 0 mortgage loans from anyone else. Close to 34% of the customers still are new to credit. When we started, it used to be 67%. So most of the customers have very small gold loan somewhere or a...
So you would be getting that benefit because you're getting a new customer, you would be charging them that interest rate that helps you cover the costs that you also have.
Absolutely.
Basically. Okay.
And moreover, this is a priority sector loan.
So you get
banks are very keen to do NCDs or DF with us.
Yeah.
So that is added benefit.
Well, Mr. Sharma, thank you so much for joining us in the studio. We wish you the best for the IPO. We definitely look forward to your first results post-con and